Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, a little movement across stock futures today after a strong rally to start the week. Tech led the charge Monday with chip stocks popping on news Nvidia will pour $100 billion into OpenAI. Meanwhile, gold continues to power higher. The precious metal is now on track for its best month since 2020. Plus, all eyes on the Federal Reserve and Chair Jerome Powell. He's set to speak today for the first time since the central bank cut interest rates. His comments come after several policymakers indicated the Fed will take a more cautious approach to rate cut decisions. Investors will closely watch the comments for more clues on the Fed's path ahead. And over in media, Disney's ABC will bring Jimmy Kimmel Live back on air tonight after pulling the show last week. Disney said it made the decision after, quote, thoughtful conversations with Kimmel, but Sinclair Broadcasting, which owns dozens of ABC affiliates, plans to preempt the program and air news instead, highlighting the pressures that networks face both from Washington and their own station partners. Let's get a check on stock futures this morning. You're pretty much seeing flat moves across the board here. The Dow edging slightly higher, up around 0.1%. And this comes after we saw yet another round of record highs on Monday. The S&P 500 hit its 28th record close. So we'll see if we can flip into the green and perhaps secure 29. But for now, let's dig into our top stories of the day. Futures continue to search for direction after chip stocks helped power the market to new highs on Monday. Plus, Fed Chair Jay Powell will deliver remarks on the economy today, and President Trump addressing world leaders at the United Nations General Assembly. Joining me now, senior reporter Brooke DePalma, live at the NASDAQ, and senior markets reporter Inez Ferre, along with Morning Brief Market Sunrise host Ramzan Kamlani, live from our London studios. And Brooke, I want to start with you on the moves we're seeing in tech. All Mag 7 players, they're turning green for the first time this year. This comes after that Nvidia OpenAI deal. What's Wall Street saying about that deal and how that could add further fuel to the fire when we look at this tech rally?
Yeah, well, there is a bit of a mixed reaction this morning based upon Nvidia's intent to invest $100 billion in OpenAI to build out at least 10 gigawatts as part of a major AI infrastructure build. But there is a bit of a mixed reaction when it comes to Nvidia stock. It is down slightly in pre-market trading here, largely because of these reactions that we're hearing from the street. On one side, Evercore ISI analysts calling Nvidia a top pick, saying that after chatting with Nvidia's CFO regarding the deal, they came away with further confidence that Nvidia remains the AI ecosystem play of choice and that the street's estimates are too low right now. We also heard from Wedbush's Dan Ives calling this another moment for the AI revolution around Nvidia, calling once again Jensen Huang the godfather of AI. And we did hear from Jensen Huang saying that this was the biggest AI infrastructure project in history, but not everyone is optimistic. We did hear from D.A. Davidson analysts saying that they're concerned that Nvidia has become the investor of last resort for OpenAI, saying that OpenAI has made commitments beyond its means, citing that recent deal with Oracle, as well as the company's $100 billion plan to rent backup cloud servers over the next 5 years, as well as that $25 billion commitment to CoreWeave. So really perhaps, stretching beyond its means there on the flip side. But needless to say, though, this deal, this announcement has pushed Nvidia stock back to the record high or near that record high of $183 and really has drove up other stocks as well, seeing a lift. We saw Taiwan semiconductor manufacturing company, ticker TSMC, as well as Palantir, get a bit of a lift in the pre-market hours this morning, as you could see right there, based upon this news and this, once again, investment or interest in the AI tech rally that we've seen over the past few months. And as you mentioned at the top, this also, in addition to what we saw with an upgrade around, or rather price target upgrade around Apple and what could be the iPhone 17 demand, we have seen the Mag 7 now reverse to the positive territory for the first time this year. And so there's still lots of momentum around Nvidia, around the Mag 7, around this tech rally that we've seen so far, over the course of the summer, now extending into September, which is typically a weaker month. month. But there is mixed reaction about what this investment deal does mean for Nvidia moving forward.
There's digestion period, I guess, after this deal. But Inez, it's not just chips making moves. We have gold powering to new highs. And it's interesting to me because clearly we're in a risk-on market. Gold often considered a safe haven asset. So what's really driving the demand here for gold?
Yeah, Allie, you're seeing gold right now that's near 3,800 per ounce. For futures, it's already past 3,800. But for spot gold, it's nearing that record. And look, it's been record after record over the last several days, more than 40% rally year to date. That's the best annual gain since 1979. You have net inflows into ETFs that is at their historical records. So you've got the year to date through August. That's the best net inflow that we've seen in the ETFs since it's the second highest since 2020. And it's not just that retail investors, it is institutional investors. So that's what these net inflows are also indicating, that you're seeing institutions that are also buying up the precious metal. And you are seeing, of course, central banks that have been accelerating their purchases of the precious metal. But I do want to highlight that you are seeing this massive rally in gold with a backdrop of a declining U.S. dollar, because we've seen the U.S. dollar index down more than 10% year to date. And this has also helped lift gold prices because gold is invoiced in U.S. dollars. So you're looking at the U.S. dollar declining, you've got the Fed easing, you've got central banks buying, you've got net inflows into ETFs, and all of this is very bullish for gold. The street's still very bullish on the price target for where it's headed. I mean, you've got Goldman Sachs that's predicting 4,000 by mid-2026. They do see an upside risk or an upside risk of even, you could even get to, there's some analysts that are predicting up to 5,000 by the end of next year. But there is a risk of some pullback because you're starting to see some speculative plays. So Wall Street is also warning, watch out for pullbacks on the way higher.
Now, speaking of Fed easing that you just mentioned, Inez, we will hear from Jerome Powell later today. What will markets be looking out for, especially as we've heard from several central bank leaders, including Fed President Raphael Bostic, that maybe the Fed doesn't need to cut anymore this year?
Yes, so Raphael Bostic had said in an interview that he was fine with one rate cut this year, and that he was really looking more at the inflation side of the mandate, or the price stability side of the Fed's mandate, and that's where he sees more risk. Even though you are seeing a weakening labor market, he's seeing more risk on the inflation side. And look, Powell made it very clear in his speech last week that the cut that they made was a risk management cut. Also talking about that there's no risk-free path. So they really are in this having to look at both sides of the mandate on employment, maximum employment, and also on the price stability. But what's interesting is the sort of deferring among Fed members, because we heard from Bostic, and who will also be speaking today. But Stephen Moran also yesterday talked about his desire for a 50 basis point cut at the next meeting, and that he wanted a 50 basis point cut at the last meeting. So what he's looking at is more on the labor side and the risks to the labor market and additional layoffs if the Fed doesn't ease more.
And finally, Ramzan, over to you in London. We have President Trump set to speak at the UN. Trade tensions with China and India top of mind. We have the war on Gaza heavily weighing on global leaders. What are you watching out for today?
Well, it's interesting. It's his first speech at the UN in around 5 years. And look, just yesterday, you mentioned it, France became the latest country to formally recognise the Palestinian state. And that's a policy that Trump, he vehemently disagrees with. And meanwhile, we have Israeli forces, they're continuing their ground offensive to fully occupy Gaza City. Now, the president has in the past been pretty critical of the UN. In fact, the US has all but stopped paying its bills to the United Nations since Trump took office back in January, and it still has an outstanding arrears from 2024. That's according to the UN. It says Washington owes it more than $3 billion. Now, Trump, in his speech, according to the White House, will also, quote, touch upon how globalist institutions have significantly decayed the world order. He's also going to be holding a raft of meetings after his speech, so he'll probably sit down with the UN Secretary General Antonio Guterres, and he'll also, it's been reported that he'll sit down with a number of Middle East leaders to talk about that situation in Palestine. Now, as you mentioned as well, he's making this speech amid continued trade tensions, especially with India and China. That $100,000 H-1B fee will impact nationals from those countries more than any others, as we all know. India and the US have resumed trade talks, but currently India has been slapped with a 50% tariff. But there might be some good news when it comes to China. Now, it's among several countries, including Turkey, Uzbekistan, Morocco, Indonesia, that are considering or have announced orders for Boeing aircraft. Now, President Trump is taking credit for these purchases, because he says he's been championing Boeing products. And in fact, the US ambassador to China, David Perdue, said that the two countries were in advanced negotiations for a huge deal to buy Boeing planes. Now, Bloomberg have said that this order could involve up to 500 aircraft, which would be Boeing's first major Chinese sale since before the pandemic. Now, we all know that the American playmaker has lost ground to its European rival Airbus in recent years, so this would definitely be something that Boeing, and in particular the US, will be looking out for.
All right, Ramzan, Brooke, Inez, thanks so much. A lot to look out for today. Well, coming up on Morning Brief, we bring you today's top trending tickers as we count you down to the opening bell. Now time for some of today's trending tickers. We're watching Kenvue, AutoZone, and Ørsted. First up, Kenvue. Shares rebounding today after Monday's sell-off. That drop came after the White House urged pregnant women to avoid using Tylenol, with President Trump linking its active ingredient to autism and encouraging women to tough out fevers. Researchers are pushing back, saying that advice ignores decades of evidence and could endanger both mothers and babies. The stock now recovering most of those losses. Next up, AutoZone. The company reporting its fifth straight earnings miss, posting an adjusted EPS of $48.71 for the quarter. That fell short of Wall Street estimates. AutoZone did not issue a 2026 outlook, but did say it plans to expand its store footprint, with the CEO stressing a focus on building market share over time. Finally, Ørsted. Shares surging after a U.S. judge ruled construction can resume on its nearly completed wind farm off Rhode Island. The decision rebuffs the Trump administration's effort to halt the project. Ørsted said it will restart work after the court found the Revolution Wind project could face irreparable harm if construction were stopped. Work will be allowed to continue even as a lawsuit over the government's August 22nd order plays out. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, futures little changed after all three major averages closed at yet another record high. The momentum trade continuing to power artificial intelligence, gold, and small caps higher. But my next guest says investors should prepare for some volatility and think of any pullbacks as a potential buying opportunity. Joining me now is Jean Goldman, Cetera Financial Group's CIO. So Jean, let's start there. You have called this rally legit. You've noted cyclicals are outperforming. You have bond yields falling. Breadth continues to improve. So where does this tell you about where we're at the current bull market?
Sure. Good morning, Allie. Thanks for having me on your show. The market has had a wonderful run. 2025 has been phenomenal, lots of volatility. But what we're looking forward on a go-forward basis, we do see some type of market pullback. I mean, you look at what's going on. We have high valuations. So the PE ratio in the S&P on forward earnings is around 23. Remember, the tech bubble was at 25. We've got significant market concentration. The top 10 names in the S&P are about 40% of the index. The Fed is going to cut rates, but maybe not as much, given especially the comments we're hearing from different Fed speakers. And tariffs. Think about tariffs. Tariffs still need to either be passed on consumers as inflation or impacting profit margins. So you take all this into consideration. We do expect a pullback, maybe 3%, maybe 5%. But like we've been telling our advisors and clients, any pullback is a buy the dip opportunity. First of all, we don't see a bear market because you need a recession to have a bear market. The economy looks pretty good. You look at Atlanta Fed's GDP now, it's at 3.4%. We're seeing retail sales come in above expectations. Consumer spending pretty strong. Productivity is rising. Also, as I said, this rally has been legit near term, but you're starting to see market breadth weaken a little bit. Also, tariffs are adding $350 billion in run rate to the economy. That's good news. And most importantly, 2026 earnings look pretty good on the go-forward basis. Stocks start to price in events about 3 to 6 months in advance, with earnings next year for the S&P around 13.5%. That's a pretty good number. Oh, my last point, I forgot about this. $26 trillion of cash on the sidelines waiting for better valuations. All great news. Why we continue to be the buy the dippers right now.
But Gene, we do see stocks at record highs. Markets have even been able to defy that typical September seasonality. So how do you buy the dip if stocks ain't dipping? I mean, what do you think the pullback comes from? Is it all tied to the Fed expectations?
Yeah, I think, first of all, the question is, what do you do while before you have that dip? What we're doing in our portfolios today, we're pretty diversified. I know diversification is an old, kind of boring strategy, but it works. It helps mitigate near-term volatility. So until we see that type of dip, we're increasing our allocation to liquid alternatives, to REITs. We're also overweight other parts of the market that haven't really rallied with large caps, like value, like mid cap, like small cap. Remember, when the Fed historically cuts rates, we tend to see market breadth widen a bit. There's some good opportunities there. From a sector standpoint, we like financials, and then we've also recently upgraded some of the more cautious sectors of the market because we think there's some great opportunities, especially on valuations. Like, for example, we like REITs. We just upgraded REITs. And REITs, given low interest rates, given lower yields, there's some structural tailwinds, especially around e-commerce, cloud adoption, data center, and of course, valuations look great. And then healthcare. I know healthcare has been a little choppy lately, but really attractive valuations and some really good long-term tailwinds driven by aging demographics, managed care, and of course, some innovation around biotechs. So we're kind of positioning ourselves in anticipation of a pullback, being a little bit more conservative, being diversified, and again, exposure to other parts of the market, not just the Mag 7.
So if we don't get the number of rate cuts that markets expect, how do you anticipate that to play out across some of the sectors you were even mentioning that have benefited? And even if you look at small caps, that's really rallied. Do you expect a reversal of that if the Fed maybe takes a pause on their easing cycle?
Yeah, I think if you're Jay Powell right now, Jay Powell, I know he speaks today at noon East Coast time, and he's got a lot to talk about. He's got to talk about inflation pressures. Yes, the labor market is slowing down, but the economy looks pretty good. There's a lot of inflation pressures. There's also some difficulty, I think, in my opinion, for the Fed to build consensus. So this is all taken together. We have this volatility likely to overhang the market. You look at the Fed right now, you've got Hammock and Masalam and, of course, Jay Powell all saying we should pause a little bit and watch the data. But then you have Moran and Bowman this morning, just a few minutes ago, coming out and saying we should cut rates aggressively. There's a difficulty to build consensus. I think the markets are anticipating this and they're waiting on the sideline to say, how does this play out? But regardless of what happens, volatility is going to pick up, and that's where we see the pullback coming into play. But most importantly, we just don't see a big, nasty bear market because historically you need a recession for a bear market, and we've only had 3 bear markets without a recession, 2022, 87, and 1962, and we don't see a recession anytime soon.
So no bear market, but do you think we're at risk of a melt up in stocks right now?
Definitely. That's part of the reason why we do expect some type of pullback because, again, the PE ratio on forward earnings is around 23. The tech bubble was around 25. And if you're seeing, the Fed cutting rates while the economy is doing okay, yes, I agree, the labor market is slowing down. Part of that is probably driven by AI. AI is taking some jobs away. But at the end of the day, GDP, according to the Atlanta Fed, at 3.4% for the third quarter, that's a great number. And the City Economic Surprise Index is improving every single day. All this in consideration that the economy is going okay. I don't think we need more rate cuts. At that point, with that in consideration, we do risk a melt up where everyone jumps in and buys aggressively. We worry about this.
And Jim, we only have about 30 seconds, but what's the difference between a melt up versus a bubble? And are we even close to worrying about a bubble at this point?
That's a tough question at the end of the session. A melt up in a bubble. Melt up is more of a cautious move higher, but still buying. A bubble is when things get really bad and burst. And we don't see a bubble bursting because, again, there's a lot of cash on the sideline. There's a lot of people waiting on the sideline to jump in with that $26 trillion of money market and savings on the sideline. So we don't see a bubble. We see a potential melt up, which could push stocks down a little bit later.
All right, Gene, you did pretty good with that with 30 seconds left. Thank you so much. Appreciate it.
Thank you.
Well, coming up on Yahoo Finance opening bid, our own executive editor, Brian Sazi, joins us now. Brian, what do you have cooking on the show today?
Allie, we're going to dive into that Nvidia and OpenAI deal. What does it mean for investors? What does it mean for the rest of the supply chain? And then something that is really in my wheelhouse, all things meme stocks, Better Home, look like it could have another rip-roaring session. And again, all eyes still remain on Open Door. Shout out Eric Jackson, driving a lot of these stocks on X.
Yeah, a lot of talk online, certainly, about those meme stocks. Thanks so much, Shaz. But that does it for Morning Brief. Much more ahead on Yahoo Finance. Stay tuned.